It's episode 9, guys. So, again, all of this up to here are already through. Now, we go to this, the financial statements of the not-for-profit organization. And in order to make it easily relatable, I'm going to compare each of these to the financial statements of profit organizations. So, in this episode, we will start with the statement of activities, followed by the statement of functional expenses. But if you are new to this channel, please go to the description of this video because the links of the previous episodes are there. So, let's start. So, let's have first the statement of activities. But before that, let's first have a review on the income statement and the statement of changes in equity for profit organizations. Why? Because the statement of activities for me is just a combination of these two financial statements. So let's start with the income statement. So the income statement is just revenue and other gains or income if ever there are, less expenses and losses. And we will get the net income. Next is we have the statement of changes in equity, which starts with the beginning equity or capital balance, then add the current investment from the owners, and add also the net income, which is this one, and deduct the withdrawals by the owner and the net loss. Again, this net loss happens if the expenses are greater than the revenue and gains. And that's it. And you will get the equity ending. Now, before we compare these two to the statement of activities, let me present to you first the statement of activities. So, let's start with the unrestricted net assets. I told you in the past episodes that this portion of net assets is composed of tubers. So, this is an acronym. So, for T, we have transfers from restricted net assets. Again, this happens if there are donations that are temporarily restricted by the donor. However, the restriction has already been lifted. So, next is we have undesignated donations for you. And this is for donations freely given by the donors without any restriction at all. While B stands for board designated donations, which are donations which can be used based on the wishes of the board of trustees of the not-for-profit organization. And E is for expenses, and R is for the revenues and gains from exchange transactions. It could be from ordinary course of business of the NPO, like tuition fee revenues of NPO schools or patient revenues of NPO hospitals. And lastly, we have S, which is for support like government funding for the NPO and the like. So that's tubers. And these are found on the statement of activities. But we are not yet finished. We still need to get the unrestricted net assets ending. And how do we do that? Just add the unrestricted net assets balance at the beginning of the year to these tubers and you will get that. I know, you wanted to ask, how is this related to these two? Well, let's finish first the statement of activities. Yes, it's not yet finished. So, if we have unrestricted net assets section here, we also have the restricted net assets section. So, these net assets will also increase by way of donations. However, they are restricted donations, whether temporarily or permanently. They are not undesignated or board designated. Now, this section also can be reduced by this transfer. Again, if the donor placed restriction expires, then this will happen. The restricted fund will be decreased because it will be transferred here. So, another item that can add this fund is the investment income. If these funds are invested, whether permanently and temporarily restricted funds, if they are invested, they will gain investment income. But normally, revenues and expenses are only found here in the unrestricted portion of the net assets. Then the same as here, we just have to add the net assets restricted beginning balance and you will get the net assets restricted ending balance. And after that, just add these two and you will get the total net assets ending. Now, let's talk about how the statement of activities relates to the income statement and the statement of changes in equity for profit organizations, okay? So here we go. As you can see here in the income statement, we have revenue and expenses. We also have that in the statement of activities, and that's from here to here, okay? And in the statement of changes in equity, we started and we added the equity beginning balance. Actually, we also did that here also sa statement of activities for both the restricted and the unrestricted net assets, remember? And here in the statement of changes in equity, we have investments from owners. So in the statement of activities of not-for-profit organizations, instead of the investment from owners, we have the counterpart donations. Actually, all types of donations. We have undesignated, board designated, temporarily restricted, permanently restricted donations, or donations in the form of support. So again, instead of this investment from owners, the counterpart for the not-for-profit organizations are the donations. And here, in the statement of changes in equity, we have the net income or the net loss. And if we're talking about the statement of activities, again, we have this whole section here. And lastly, we have withdrawals here in the statement of changes in equity for profit organizations. Well, on the NPOs, we have no counterpart for that one. So, at this point, we can say that the statement of activities is somewhat similar to the income statement and the statement of changes in equity of profit organizations combined, except of course for investments and withdrawals of owners. So, that statement of activities for you. So, before we end this video, I have something to add. So, these expenses right here, we need to focus on these expenses, can be classified by nature, which is what we are used to in accounting for business or profit organizations. Like, if the expenses incurred is related to salaries of administrative personnel, we put it as salaries expenses in the OPEX or operating expenses and specifically under the general and administrative expenses. Now, if the expenses are incurred in relation to selling of goods, we still put it in the OPEX but it's already under selling expenses. Or if the expenses are incurred due to the production of goods, they will be capitalized first to inventory but will be deducted as cost of sales after it will be sold. So, that's the classification of expenses by nature, and I am assuming that you already know that. Such classification by nature is still used here in the not-for-profit organizations accounting. The only difference is that an NPO can further classify such expenses to program expenses and supporting activities expenses. I've mentioned this before in the previous episodes, and I told you that this type of classification is called functional classification of expenses. Now, program expenses are those incurred in relation to the purpose or mission of the NPO, while supporting activities expenses are not. So, to make it relatable, let's say an NPO has a salaries expense of 1 million in the statement of activities, of course. So, in the statement of activities, such salaries can be broken down into program expenses. If, for example, there are salaries included here in the 1 million, which are given to employees directly working on the NPO's main programs, and a portion will go to the supporting activities expenses for salaries of employees that are, for example, in charge with the management of the NPO, like vice president or HR or the accounting office, or employees in charge in fundraising activities, and other employees not directly working for the attainment of the purpose or mission of the NPO. Now let me clarify. The NPOs in general can, only can, which means they are not required to classify expenses by function, but they are encouraged. Now, if the NPO opts to classify expenses by nature and by function also, then they can do it here in the statement of activities. But there are other options, like instead of classifying expenses by function here, the NPO can make a separate statement known as the statement of functional expenses. Now, Let's talk about that in the next video, the statement of functional expenses, to keep this episode short. So, going back here, so we are through with this. So, check mark. So, now it's time for the outro. If you learned, please click like, subscribe, and hit the notification bell and select all to be updated on my next videos. You can also comment in the comment section below. Thank you for watching and see you on the next episode and take care.